Hello friends, in the series on the income tax cases, today we will discuss the case of Assistant Commissioner of Income Tax versus ROSEBYS Interiors India Limited. This case has been reported in 100 ITR Tribunal Short Notes 4 and the matter has been decided by Ahmedabad D bench. The case has been decided on 4th November 2022. This is a very interesting case in which the assessee incurred an advertisement expenditure of 22 crore rupees in the assessment year 2009-10 and capitalized that expenditure under the head Capital Work in Progress. The assessee filed its return of income and did not claim this expenditure in its computation of income. But after filing the original return, the assessee realized that this was not of capital nature, this was of revenue nature, and hence the assessee revised its return of income by claiming this 22 crore rupees under section 37 subsection 1 as revenue expenditure. The assessment year was under scrutiny. The assessing officer disallowed this advertisement expenditure on brand building on two grounds. The first ground was that it was the opinion of the learned assessing officer that the assessee himself has capitalized the amount. That is why this amount cannot be allowed to the assessee as revenue expenditure. The second point of the learned assessing officer was that the amount incurred on the advertisement expenditure for brand building was almost 4 times the turnover of the assessee, and hence it shows that this is a capital expenditure. So, on the basis of these two grounds, the learned assessing officer disallowed the advertisement expenditure which was capitalized by the assessee into the balance sheet. The assessee appealed to the CIT appeal and the CIT appeal gave relief to the assessee. When CIT appeal allowed the appeal of the assessee, the department preferred the appeal before the ITAT. The ITAT also gave relief to the assessee and upheld the order of the CIT appeal by deleting the additions made by the learned assessing officer. ITAT held that the assessing officer has not challenged the genuineness of the expenses. There was no doubt that these expenses were incurred by the assessee on the advertisement for the brand building purposes. First of all, this was the point of the ITAT. And the second point which the ITAT held that there is no concept of deferred revenue expenditure into the Income Tax Act. It was the point of the ITAT that the advertisement expenditure which is incurred for the brand building is revenue in nature, and since the amount is huge, so only on this basis this amount cannot be capitalized and can be claimed into installments, because ITAT held that there is no concept of deferred revenue expenditure in Income Tax Act. So on these two grounds, the ITAT gave relief to the assessee. From this decision, there are two takeaways from this case. First of all is that in Income Tax Act, it is immaterial that whether we have debited the amount into the profit and loss account or we have shown it as an asset into the balance sheet, meaning thereby that we have capitalized it. If the expense is to be allowed by fulfilling the conditions of section 37 subsection 1, that is, the expenditure is not personal in nature and it is wholly and exclusively for the purpose of the business, then this expenditure should be allowed. And the second point is that the quantum of the expenditure does not entitle it to be capitalized. We have to see the nature of the expense. If the amount is big and it is a revenue in nature, then it should be allowed. And on the contrary also, it may happen that the amount is not so huge, but the nature of the expense is capital, then it should be capitalized. So the ITAT gave a very balanced judgment by upholding the order which has been passed by the CIT appeal. Friends, this case is very important as far as the understanding of the advertisement expenditure relating to the brand building is concerned, or the difference between capital expenditure or revenue expenditure, or the expenses to be claimed under section 37 subsection 1. At the end of this video, once again I am repeating the name of the case. The name of the case is Assistant Commissioner of Income Tax versus ROSEBYS Interiors India Limited. This case has been reported in 100 ITR short notes page number 4, and the matter has been decided by Ahmedabad ITAT D bench. The date of the judgment is 4th November 2022. Thank you, friends.